in to this broadcast from BQ Prime. The government has made a series of moves. Uh, they've raised the export duty on diesel, petrol, and ATF by different brackets, of course. And of course, there is also duty on oil producers. And as a result of which, we've seen stock price movements, quite sharp ones there on the entire oil and gas space, the oil upstream companies, the marketing companies, and Reliance, the big boy as well. So if you are not completely sure of what this fundamentally means for each of these players, let's try and get in somebody who has a very strong hold on this space in particular, and the markets in general, of course. Dipan Mehta needs no introduction, Johnson. And let's try and understand this segment by segment as to what it means. Dipan, great having you. Thanks for joining in.
Thanks for having me, Neeraj. Always a pleasure to be on your show.
Thank you so much. Dipan, can I break this down and can I start off with the overall announcement once very quickly, and then we'll go into Reliance, then the OMCs, and then the upstream companies. So what is it, this in a nutshell? You reckon this has been done for a particular purpose? Is it short-lived, or could it be there for a long time?
So I think it's more to do with managing inflation domestically. And there were consistent news coming that there is shortage of refined products, especially up country. And these things are viewed very seriously by the government because it straight away affects the common man and affects trade, investment, transportation. So this is a step taken by the government to ensure that we anyway have a surplus refining capacity, and that should be put to good use. And we have that particular safety valve. So why not just open it and let the refined products be sold majoritarily in India? So there are no shortages domestically. And then whatever is exportable can be exported. But first priority has to be domestic, because there were reports that some of the domestic funds, some of the domestic refiners, some of the domestic refiners were exporting at the expense of selling in the domestic market, the locally installed capacity. So that was not being viewed positively by the government.
Okay, so Dipan, let's try and break it into firstly for refiners. What does it mean? Because OMCs have shown a positive reaction. Could it be because they hardly anyways export until the domestic requirements are met, and therefore it could be net a zero impact of sorts?
In fact, slightly positive for them, because there would be additional volumes available from the standalone refiners to sell to the domestic oil marketing companies. For the record, almost all the oil marketing companies, not almost, all the oil marketing companies have a shortfall as far as refining capacity is concerned. So they are all trading in refined products. And those products they are buying from domestic standalone refiners, could be Reliance, could be some of their own PSU refining companies per se, could be SR Oil as well. So I don't know what the new name is, sorry. So some more surplus volumes available in the domestic market for oil marketing companies, and that's always positive. It helps them manage their logistics better, slight softening of prices as well. And that always is positive, from domestic refining profitability and oil marketing companies' profitability point of view.
Chennai Petro as well as MRPL have taken a very sharp knock, proportion to the kind of impact that fundamentally would be there on the stocks?
Well, I think it's more or less justified. See, Neeraj, the broad question here now is that whenever you're investing in commodities now, these are the risks which are there. And something like this, and then what happened, what the government did with steel, is really trial by fire for the commodity investors and traders as well. And that's the reason, if you've been following me over the years, I've always been very negative commodity stock, because you just don't know where the next curveball will come from. And now this has hit the entire refining industry within India, private sector as well as public sector. And a whole host of uncertainties come into play as to now when it will get relaxed and what is the way forward. So these things are going to be, part and parcel of investing in commodities. And while you may say that, the profits are not going to go down that much for the domestic refining players, but it's a sentimental effect that the government, clearly has, controls your fortunes, and it can destroy your fortunes at any point of time by way of adverse taxation or even volume restrictions. And from an investor's perspective, you don't want to be in such businesses where at the, signature of a bureaucrat, the prospects of the company can completely change.
True. Well, the big boy Reliance, Dipan, and my math suggested that about 7, 8% or 9% impact on EBITDA because of this business hit to the refining capacities. Simply because unless I'm very wrong, 50% of the capacity is anyways in an SEZ, which doesn't get impacted per se. What is your thought on the impact on Reliance, both fundamentally as well as sentimentally?
See, it's a sentimental dampener, and Reliance, because it's a conglomerate, will not get impacted as much. See, we are not buying Reliance just for the pure refining business. It's got the other polymer businesses, it's got other chemical businesses, and it's got geo and retail, and then it's getting into renewables as well. So Reliance is an amalgam of many businesses, and the values are derived more from non-refining businesses. So yes, I think it's going to impact the profits of Reliance, but in any case, I think it's made great, super profits on the refining side over the past few weeks and months or so. So some amount of normalization is happening over there. And I don't think that from a fundamental point of view, it is going to be impacted that much on a consolidated basis. But these are risk factors, as I said earlier, and no
Yeah.
business is immune from such risk person.
Yeah, but I'm just trying to wonder. Sorry, I don't mean to press you, but if there is a assumption about the quantum of impact that could be there, even would a 7-8% drop in Reliance factor in today's negative news, or is it difficult to say?
See, these are very difficult questions to answer because market sentiment also is pretty downbeat at this point of time, and such adverse news tends to get exaggerated in the on the counter per se. So sure, you could have another 4, 5, maybe even a 10% drop over the next few weeks in Reliance. But does it mean that the long-term fundamentals of Reliance Industries has dramatically changed? And I use the word dramatically. The answer is no to that. It is into various businesses. They go through their ups and downs, and there's a degree of volatility in some businesses. And frankly, the management knows about this thing, which is why over the past decade or so, they've arduously tried to diversify their revenues and profits away from commodity type businesses. And those are really paying off just now. I think 10 years ago, if this was happening in Reliance, then the stock price would have been down by 15, 20%. Who knows, So let's look at the positive side over here.
Okay, my final question, and that is on the other upstream companies, All India and ONGC. There was a lot of talk about how there'll not be a windfall tax, but this has come and how. Now, what's your sense on what does this do? One, of course, again, fundamentally, because they were anyways, their earnings were pricing in crude at maybe 60, 65, 72 a barrel, depending on your math or anybody's math. But also what it does, like you said, sentimentally, because it again shows that how the government is coming in and taxing these companies at a sign of a signature, as you said, from a bureaucrat.
Yeah, well, we've never been great fans of ONGC and Oil India. And frankly, I looked at so many investor portfolios. Actual genuine investors don't own ONGC and Oil India. I mean, LIC owns it, a few mutual funds own it, the CPSE ETFs own it per se, but nobody really owns these stocks because of these risk factors per se. So I don't think that it's going to impact the retail investor as much. And this has been the case since they've got listed. I mean, these companies work as extension of the ministries, and in the past it was a subsidy sharing, and then there were restrictions on when and how they could raise their prices, and now this has come for the sector as a whole. See, there's nothing wrong in what the government is doing, because end of the day, the objective of the government is to protect the consumer, that is us. But sometimes it goes against the interests of the minority shareholders, and the minority shareholders understand this thing as well, which is why they are quoting at such low P multiples or dividend yields, such high dividend yields. So this is nothing new, and I think it will get on at some point of time. You will find them to be dirt cheap, and you will buy, and you may sell also after they've gone up 40, 50%. But these stocks are not for retail investors.
Okay, so Dipan, last question. You are saying that, I mean, there is this hit that these companies, upstream companies, have taken, but we know that their profits by and large could be strong because of higher gas and higher oil realizations. You still don't believe that you would want to take a call there, because this move as well impacts their realizations quite significantly.
It does, and also one big negative is that none of the upstream oil companies are showing any volume growth. So you need to keep that in mind. Even when you are buying a commodity company, you are of course dealing with price volatility. But the hedge over there is if that particular company is gradually raising its capacity, like what is happening in steel, in aluminium per se. But then these oil companies, oil refining companies, and some of the mining companies in India are just not increasing their volumes as well. So they are totally at the mercy of international prices. And that's not a sound business model that at least investors would like to follow.
Got it. Dipan, it was lovely having you. In about 10 minutes, you've given us a great summary of how to look at this move today and the overall businesses per se. So thank you so much for that.
My pleasure.
Great having you. Viewers, thanks for tuning in.